So let's summarize that, and let's talk about where we are, where we think we're going. So we do think winter is coming. The question is, how severe is the winter going to be? When is it? And can we avoid the inevitable? No, winter's coming. So what are we going to do about it? So if you were a gardener, you would do what these people did many years ago. They would get out their trusty Farmer's Almanac, and you'd say, what's the weather going to be like so I can figure out my planting crops? So last year, this is the old Farmer's Almanac weather map for 2018-2019, showing the continental United States. But a point of interest, about 20 years after this came out, the original Farmer's Almanac, a new revised Farmer's Almanac came out. They came out with a completely different forecast. So this gave us pause to think. We said, okay, what's our forecast going forward? So we believe, and our base case is that it is fall, getting closer to winter. We don't foresee a recession in 2019, though we do see economy and the earnings continuing to be strong. We see the Fed continue to tightening in 2020, possibly leading to a recession in 2020-21. What do you want to do at this point? You want to invest in equities, specifically dividend cash flow paying equities over bonds. Remember 1985 and 95? Remember those charts that followed 84 and 94? So this is what we predict is going to be happening here. You want to look to reduce the risk. You want to start pruning some of that risk off the table, and you do that by diversifying through hard asset real estate and different kinds of investments. So in this case here, roots are really strong still. So some of you might have noticed we've recently rebranded. We're no longer Nicola Wealth Management. We're now Nicola Wealth. So we said, hey, this will give us a great opportunity to give you another forecast, just like the two almanacs. So what do we think might happen under this scenario? That Fed keeps rates too low for too long. The result is a more severe recession with an asset bubble in 01, or maybe something stagflation-wise, like we saw in 73, 75. In this scenario, all asset classes are under pressure, very problematic. Hence, it's important to have that cash flow going. Longer term, though, we do think there's the debt issue. More debt, higher interest rates, but problematically, less room for fiscal stimulus. And then finally, under this scenario, roots might get severed. So we hope we've given you something to think about in terms of the 4 seasons of investment. With that, I'm going to ask John to come up and talk a little bit on the personal side. Thank you.